look at the jump in Aritzia today. That stock practically a double over the past year, although it is still down from 2022. Let's get more on the move in the stock today from Bloomberg's Stephanie Hughes. Stephanie, go ahead, please.
Hey, Andy, happy Friday. So, yeah, you're absolutely right. Shares of Aritzia have moved up as much as 15% today, which was the biggest intraday gain since January, and it put it firmly on top of the TSX best performer list. And with a jump like that, it really wasn't a contest there. And this was because the first quarter earnings reported after the bell last night came in at 22 cents per share, which was ahead of what analysts were expecting. This was fueled mostly by the U.S. expansion strategy as well as a product refresh, both of which have been really paying off for the Vancouver-based clothing retailer. Analysts said that it looks like Aritzia is really moving past this challenging fiscal 2024, and looking ahead to fiscal 2025, it looks like the strong revenue gains will be weighted to the back half of the year as it plans to open new boutiques. So like you mentioned or alluded to, it really has been this turnaround story for Aritzia. It was really struggling last year and even had its worst record drop last year, but that was then, this is now. We have TD analyst Brian Morrison saying he's taking more comfort in management messaging, as well as other details like the reception of the product refresh from new and existing clientele, as well as improving new store productivity and new digital initiatives. And he said all of this working in tandem is putting Aritzia back on an earnings growth trajectory. Another high flyer I'm looking at today is Cogeco. Those shares are up as much as 8.5% today, which was its biggest gain since September 2020. And investors are really reacting to the revenue and EBITDA beat that the cable company had after the bell last night. Analysts pointed out that earnings were sort of weighed by this higher than expected restructuring cost, but TD's Vince Valentini said that considering how the two other cable companies in Canada are expected to post negative revenue growth, seeing a positive growth coming from Cogeco kind of puts it ahead of the others. So got two high flyers for you there, Andy.
You had a good story yesterday. I think you did it with Jeff Morgan, just looking at how this advance in the TSX composite this year has been much more broad-based than America's. I know it's not an entirely new theme, but apparently as of yesterday, for every stock that has dropped on the benchmark in Toronto year to date, two have advanced or had advanced as of yesterday. So, and you're arguing that shows a possibly solid foundation to the rally in Canada.
Exactly, yeah, and that line you just mentioned really stood out to me too. It seems like instead of having like these flashier names like Nvidia or Apple that are, severely outperforming the market, it's more of a broad-based rally, so it kind of has steadier gains for the TSX. And we noticed that the equal weight index on the TSX was actually outperforming that of the S&P 500. So it's a really interesting, different perspective there, Andy.
Of course, there is a school who says just buy an index fund. But whenever we have an active manager on BNN Bloomberg, they seem to say, oh, this is the time for active management. But I guess that's what they do. If you sell hammers, it's time to use a hammer. Anyway, thanks very much, Stephanie. Exactly. Have a great weekend.
Cheers.
Bloomberg's Stephanie Hughes.